This week, guys, I did something that I never thought I would do someday. I bought stocks of a company that might be overvalued. And usually what I do is typically the other way around. I try to buy companies that are undervalued. So no spoiler here, I'm talking about Tesla. Before everyone shoots rocks at me, in this video I'm gonna explain why I think it might be overvalued, and I'm also gonna explain why it also might be a very good investment. And I'm gonna start by why I did this. I do believe that as a human species, we do have an agenda. So to me, the top priorities of this agenda would be human health and lifespan and space exploration. But in order to get there, we also have to make some huge advancement in computer power and communication and transportation, and find a way to use great sources of energy. And these are the reasons why I think what Elon Musk is doing through all his businesses, through all his research, through all his developments, these are so important for our species. And that is why I sort of wanted to be part of this adventure, and the only way to be part of this adventure right now is to buy stocks of Tesla, because this is the only company that you can buy right now. And I wanted to live fully the good news and the good advancement toward the energy and the transportation that Tesla is developing right now. So for me, it was like fun money. It was like the money that I spend for fun, if you want. So I gotta say that I do believe in Tesla, the company, and I do believe in Tesla, the stocks. I do believe that they're gonna sell some product, that they're gonna have some good margins on this, and they're gonna make money. It's gonna be a profitable company. And I also do believe that the stocks will grow. And one thing that is sure about Tesla is that it's just like Frieza. We haven't seen its final form yet. But what I do believe is that right now there's a huge hype around Tesla. So what I think might be happening right now is that this would be Tesla, the company, and all its operating activities and its income and expense and capitals. And the stock price would be here because there's a lot of hype. There's a gap between the price and what the company is right now. And I think they both can grow together, but we have to look at them separately because clearly the stocks has some support and some interest that goes beyond the incomes of Tesla. Some people will say that it's about its potential and that it's about its future. And some people will say that it's just because it's not a car builder company, but it's an innovative company in transportation and energy, and it should be look like it. So both the company and the stocks can continue to have a really nice growth, but I think that the price is not directly linked to what the company is right now. We also gotta say something. Building a car builder company is really no easy task. I mean, it's a very, very, very competitive industry. Companies that are there since decades. They have huge chains of productions and they have a distribution system that is across the world. So it's hard to get in the game and to have competitive advantage because the volume that they produce is already so high that they can get the cost of productions and distribution very low. But Tesla right now seems really on a good way to be doing it. And they've just posted their last quarter results and it's pretty impressive. Seriously guys, look at this. This third quarter of 2020 is completely insane. Look at these. They've never produced more car and the increase is significant. And they've delivered more car than ever. And this is pretty important because we all know that Tesla had some issues in the past with producing and delivering the car that were in demand. And when you look at this, every quarter he raised his gross margin on the sales that he makes. And this is really impressive for a new company that arrives in this market, in this industry. It seems that he really did a good job on working its production lines, and as he gets more volume, he's probably gonna get even better. And he said that he would reach 30% of gross margin, and it looks like he's gonna make it. And we also see that they've managed to increase their earning per share right now. Since the last Q3 of last year, it almost doubled. This is insane. Their position in cash right now is pretty solid. This is probably beyond every investor's expectation for this quarter. This is really awesome. And we gotta say that Tesla also has a lot of new, very interesting developments. There's the Tesla insurance that will be an insurance that is really based on the driving of the consumer. So that will be something that I really look forward. How are you going to charge a bad driver when you can show him that he's a bad driver, and this guy can also get a quote from other insurance companies? And there's also from Tesla their solar roof that is really upcoming, and there's also the Powerwall that is really upcoming. So they're also very innovative in their pricing. If you just look how they're pricing their Tesla right now, you can have some package of firmware that are gonna cost you more, and their insurance that is based on the driving with sensors. This is just next level stuff that no company has ever done before, and this is pure innovations, right? So I'm really looking forward to see how Tesla is going to perform in those new market. But where I think it's dangerous right now, it's with the valuation. I mean, look at this market capitalization of 416 billions. Wow, this is insane. I mean, if we look at a company like GM, which has made it across the time, it's a much bigger company. Its market capitalization right now is at 51. When we look at price to earning, 847, this is completely crazy. I mean, I never thought I would buy a stocks with a price to earning of 800, almost 50. I never thought I would do this. This is really expensive. Basically, the price to earning ratio is how much do you pay of worth of the company for the incomes that it produces. So here, the higher the ratio is, the higher you pay for the incomes that it produces. So basically, the higher the number, the less effective your investment should be. And that is considering that when you buy stocks of a company, you basically are interested in the incomes that it produces, the net profits. That's what you're looking for. But there's also the future incomes of the company and the capitalizations and the assets. But basically, what you're betting on is that this company will produce incomes. Otherwise, no one would invest in a company. So right now, I did something that I never thought I would do, and it might be still a great investment. Right now, we're buying a company that has not yet demonstrated what it's capable of producing, and we're gonna see this in the future. So that's an interesting part. If the stocks goes up higher and higher and the company goes higher and higher, maybe at some point the company will catch up to the valuation, because the company is growing so fast and the incomes are so incredible. That's something that might happen. Or they could just grow, and it's always a little bit overhyped. That is also a scenario, and it's actually a good one. So time will tell. So guys, that's it for this one. I hope you like this. If you guys know more about Tesla and want to throw some things at me that I might have missed, then that would be my pleasure, because I really want to learn more and more about this company for the next couple of years. So I will be glad to talk with you about this, and I will be glad to make other videos about this. I tend to dig in this company a lot more in the couple of years. So that's it for this one, and guys, I see you in the next one.